Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon, everyone. My name is Michael Cerami, your host for today's broadcast, and I hope you all had a great end to your summer, at least the unofficial end of summer. Although here in New York City today, it sure feels like summer is still with us and going to be for quite some time. So all the best out to you. We have another rich content agenda for you here today. And more importantly, remain committed to ensuring the town hall remains your go-to resource as we kind of turn the corner and head into another busy fall. So let's go ahead and jump in. Again, a really full agenda for you today. We're going to start off with a DC and professional issues update from Rachel Dressen, who's down in our governmental affairs office in DC. We're then going to move to a technical update from AICPA tax team member April Walker. April is then going to have a conversation with Dan Choden. Dan is a partner at Trout and Company, and they're going to talk a little bit about ERC and some strategies for managing ERC with your clients. We're also very excited to have back old friend and former guest, Ron Baker. Many of you know Ron. Ron is a leading voice on pricing in particular, but today we're going to talk to Ron about business model transformation and the hierarchy of value. We'll then conclude with some open forum, your questions, and just some closing remarks. So let's go ahead and get started and bring in Rachel. Rachel, how are you today?
Doing well. You mentioned it's hot in New York. It's hot here in DC. It's been about 100 degrees here all week. So
I know.
It still feels like summer.
A little unbearable, but we're making the best of it. So Rachel, I know it's been kind of quiet on the DC front, but that doesn't stay that way for long, and things are about to change. I think probably the biggest thing on the plate today maybe is the impending government shutdown. Will it happen? Won't it happen? Feels like we've been here before, but hoping you can make a little sense of things for us here today.
Yeah, that's the big question. So as you mentioned, Congress has been in recess for the August recess, and they're just returning back to DC. The Senate came back this week, and the House will be coming back next week. And all of their focus is on government funding. Just as a little bit of background and a reminder, so the fiscal year ends the end of this month on September 30th, and they need to pass all 12 appropriations bills or a continuing resolution to continue to fund the government or some large package in order to avert a shutdown. So the thinking right now is that just yesterday, the Senate announced that they are going to try to pass a minibus, possibly as soon as next week, which a minibus is where they just take a few of those appropriations bills and try to pass them all together at once. So it looks like next week they might try to take 3 of the approps bills. So it would be agriculture and FDA would be one of them. Another one is MilCon and Veterans Affairs. And then the third one would be the transportation and housing and urban development bill. And so they would package those 3. And the thinking behind that is that it would help the Senate to get leverage with House negotiations. They all know that they're not going to be able to pass all 12 appropriations bills before the end of the month. They're really only going to be in session, given some of the holidays in September, for 11 days. So they have a lot more work than they have time to do. So this is really just a strategy on how they can start to negotiate on some of these appropriations. The House, we expect they will work on trying to pass some of the bills individually. They've passed one of them before the August recess. They just passed one of the 12, so they have 11 more they would need to pass. They won't be able to pass all 11. So we're looking at what is likely going to be a continuing resolution by the end of the month in order for us not to have a government shutdown. Quite honestly, no one knows what's going to happen. And if anyone says they know what is going to happen, they're lying to you, because the leaders don't know and members of Congress don't know. They're all going to get back in town and have some conversations. We do expect that there will be some votes on a continuing resolution, but the question is, how long would that last? Would it be a continuing resolution to fund the government for just a couple more weeks to give them a little bit more time, or would it be a continuing resolution that would take them into sometime in December? Some of the Republicans in the House on the far right of the spectrum have said that they don't support any CR that would go up until December and the end of the year. So as you know, there are very narrow majorities in the House and Senate. So it's all going to be a lot of, counting the different votes and, what do they do here or there in order to get the necessary votes in both chambers in order for us not to have a shutdown. So a lot to happen in the coming few weeks.
Yeah, it sounds, Rachel, like the Senate is probably as aligned as it's been for a while. Would you say that's accurate?
Yeah, so both the Senate leaders, Senator McConnell and Senator Schumer, have both said that they do not want to have a shutdown. So the focus and the goal is, what can they do in order for us not to have a government shutdown at the end of the month?
Great. And I know that's changed a little bit since the last time, but like you said, this is a very fluid situation. One thing I know people are probably thinking about is, if there were to be a shutdown, just any implications to the IRS. I know you had a quick update on that.
Yeah, so we've had a conversation with the IRS on whether or not they believe that they will be able to be operational if there is a government shutdown, because they do have some funding from the Inflation Reduction Act. They do believe that they could allocate that money, and so they could continue to be open for the October filing season. But the question really is, would the White House and OMB have them open, or would they have them closed given some of the optics? And, would it look bad for the IRS to be open when everyone else is shut down? Or would it look even worse for the IRS to have the funding that they could be open, but they're not? So that's a question that will come into play. So again, a lot that we'll have to wait to see.
Yeah. Thanks, Rachel. And then maybe lastly, comment on just what all this means for 1099K and Section 174.
Yeah, so unfortunately, right now, we're not hearing that the bills related to 1099K and Section 174 will get attached to a CR or whatever they do for government funding. Everything is very, very fluid, and we don't think that's likely to happen, but you never know. But right now, we're not hearing any discussions around that.
Great. Well, thank you, Rachel. I know you got a busy month coming up. We'll have you back and the team there in the upcoming town hall. So appreciate today's update, and we'll see you in open forum in just a bit. All right. So I'd like to bring in April Walker.
Hi.
April, good afternoon. How are you doing?
Hi, thanks. I'm doing well. I'm down in North Carolina, and it is toasty here as well. I think 96 or so. So
yeah, I think we've got the Eastern Seaboard covered between myself, Rachel, and you. We've got 3 hot spots here. So hopefully we get a break in the weather soon. So April, inviting you in to give us your technical update, sitting in for our friend Lisa Simpson today. So I'll go ahead and turn it over to you.
Yes, thank you so much. I'm happy to be back on the town hall. Again, I've been on a couple of times. I'm trying to do my best Lisa Simpson impression today. We'll see. We'll see how that goes. So we'll start off our technical updates. How I believe we started off last time's town hall technical update with disaster relief. Never a fun topic, but did want to share the IRS filing relief that is most recent for Hurricane Idalia. At this point, there are 49 of counties in Florida that have been provided this relief, as well as well, excuse me, as all the counties in South Carolina. That happened as of yesterday. So still could be more to come. The relief is provided to areas designated by FEMA. So the best suggestion I have is to watch that IRS website that adds those areas and counties. Just a quick information on what the relief is. It is deadlines. Most deadlines are postponed from August 27th to February 15th. The IRS did note that for 2022 returns that are extended to October 15th, that payment, that final payment, if there is one, is not extended because they reminded you that payment was actually due back in April 15th. So take a look there, and if be able to use that relief if it applies to you. Also wanted to point you to our AICPA Disaster Relief Tax Relief Resource Center. It is on our on the next slide. It points you to that resource center where we, like I said, the best place to go is the IRS website for the specific, like where the areas are. But on this resource center, there's a lot of information on how you might, what exactly you need to do to be able to take advantage of that relief. So take a look there. All right, moving on to a list of technical updates. Not a ton going on. I know that you as tax practitioners are coming up on September 15th really fast. So just a few things that you might be interested in hearing about. The IRS last week released proposed regulations on the reporting of sales and exchange of digital assets. Those proposed regulations had been highly anticipated. I think they were like 282 pages of regulations. So lots of detail and nitty gritty in there. But the main thing that you will want to know is that it's effective for 2025 transactions. So those will be, there's a new form that's called 1099-DA, digital assets, and that will be available soon. We haven't seen it, but it will be filed in early 2026 for the start of those enacting those regulations. We at the AICPA have a task force. It is a mouthful, the name of it, and I probably won't get it right, but it's Virtual Currency and Digital Assets Tax Task Force, and they are already digging into those proposed regulations, and the comments are due at the end of October. So look for those comments on where we think there needs to be additional clarity or possible changes to those regulations. Another reminder for you, it's not new information, but just a reminder that for 2024 information returns, as the IRS is really focusing on electronic filing of all types of forms. So that threshold for filing information returns has gone from 250 to 10. And there's also some clarification in there. It used to be, you could have buckets of different information returns and you might still not fall under that threshold. With 10, even if you have like a small business that you're working with that has 5 W-2s and 5 1099s that they file, they're going to fall under this requirement. And pretty very small ways to get out of this requirement. But again, with the move toward electronic, we think that this is overall really good, but just, don't let it sneak up on your clients who might fall under that. And this is just a quick note for anyone. Again, this is the IRS released this FAQ earlier this week related to the specific issue where you might have negative numbers that are coming through on a Schedule K2 or K3, where the system is getting in a circle and can't e-file those returns. So they have released this FAQ, which I've provided a link to you for how to kind of bypass that negative amount. Sorry, your phone fell out. Basically, in simple terms, it's to put a 0 on the line, and then you have to attach a statement that's in the background of it to be able to allocate the information correctly. So take a look at that if that's something that you're in the next week or so, you're trying to file returns, that is for you. All right. I know that Lisa does a great job of sharing the podcast, which I'm the host for the Tax Section Odyssey podcast. I wanted to draw your attention to a couple of episodes that are new. They're actually the newest one for today is one we re-recorded with someone from CNA on thinking about your cybersecurity. So cybersecurity insurance. So if you need it, what it covers, what it might not cover. So take a look at that podcast if you're, and then some other ones. So we try to they come out every other week, and hopefully good information for you. And so here also, Reimagining Your Tax Practice is another series that I really wanted to highlight for you. It is a free session. We do not provide CPE, but the point of it is really to just be a casual conversation with practitioners on topics that are really important for tax practice management today. I'm really excited about the upcoming one that's on September the 20th about adding AI into your tax practice. We're going to have Jason Statz and Ashley Francis, who their names definitely that you may know if you follow tax Twitter and in the AI space. So please register for those. We also record them and make them available if you're not able to come on that time. My final technical update is going to be just letting you know and reminding you about the revised standards, statements on standards for tax services, lovingly known as SSTSs. The revised statements are effective January 1 of 2024. And with this link, you'll be able to see the new copy of the standards. There'll be resources coming out to help you support you in learning about some of the new standards and some of the new the changes. But take a look there at those statements. So I think, oh, sorry, lost my thing. I think it's really appropriate as we transition from talk about standards, tax standards, to ERC, because I think tax standards and certainly do apply. So you can see on this next slide that shows information from a recent article from the Wall Street Journal. I think this is a really interesting chart where, obviously the ERC was created to be a pandemic relief, which was more in 2020 and 2021, but you can see those claims being paid are now higher than ever. So, I think that's very interesting and kind of points to some of the things that we've been talking about here on Town Hall about these third-party organizations that are going after businesses and telling them to apply for the credit. It was also, along with that, there was a Wall Street Journal article that was talking about the IRS slowing down refund payments. And basically, if you read that article, it's saying they got through the backlog of ERC claims, but then they now are slowing down and really taking a closer look at those claims to be able to guard against fraudulent transmissions. So with that, we're going to welcome up our guest today, and I'm going to try to get my sorry, I've got earpiece problems. So Dan, bear with me. So Dan Chodan is well-versed in the ERC space. We're going to talk through some practical advice he might have on some of these issues that we've been dealing with. We know that the IRS is really struggling. It's a delicate balance that, they're trying to, trying to get right the best that they can. We know that there are a lot of legitimate claims still out there. And gosh, we've talked on the town hall about a lot of different things about ERC, but we wanted to still talk about it because we've still got a lot of questions. So Dan, let's start by talking about kind of where you're coming from. What's your experience with ERC and how that has evolved?
Yeah, absolutely. So it, of course, began where a lot of us began, dealing with our clients, stepping up to the plate on COVID relief, PPP in particularly in 2020. And I know that's really part of the reason why we're even having these town halls, is that it came out of that. And it's great that they're still going. And so we've been really proud of the work that we did there. And then that just naturally evolved into ERC once both the PPP and ERC could be taken together, and grown from there. Our focus, of course, was on our clients, on helping them get the relief that they were eligible for. And then from that, we've gotten a lot of referrals, and then just being outspoken in the space. Now it's also just evolved into a lot of consulting work for other practitioners, helping on technical and practical issues that they may have. So it's certainly come a long way in this time.
Right. It has. It's been a interesting couple of years. So as I'm thinking about the latest information, guidance, you could say, about what's been shared on ERC, I'm thinking about maybe the latest IRS FAQs. There was a memorandum that came out that was talking about supply chain. How are you thinking about this new guidance? And has it changed anything about the way you're approaching ERC? Or have you got any light bulbs, any new light bulbs, I guess you would say?
Yeah, I've definitely appreciated the information that's come out, but no new light bulbs. My approach hasn't changed here. The IRS, really, I see it as they're giving us as CPAs more ammunition to fight the nonsense that's out there. But the releases that have been coming out lately, they're very helpful, but they're not any surprise to those of us who've been really involved with this program. And it's incredible to think about, because if we take a step back, a year ago, the IRS hadn't even issued their first warning yet about ERC in the process. And now there's been so many since then. It's more than I can count and keep track of. It led the Dirty Dozen list for 2023. There's been Facebook, social media posts that they're pushing out this information. They're warning in so many different ways. It really is kind of an unprecedented issue and an unprecedented response. But we can always wish that things had happened faster, right? Or there's more information. So I'm still rooting for there to be more of these memos, these GLAMs, to give us more ammo, for there to be more even congressional action. There's been talk of that, ending the program early. I doubt that happens, but maybe extending statutes to put more teeth on this thing. The slowing that you mentioned, that could result in something. I want to stay tuned to that and see if there's something tangible out of that. Does it look like R&D? And how those amended return claims have to have a lot more with them. In recent years now, that was a change. There's just a lot of different things certainly that could happen, and I encourage that additional information. The warnings have come a long way from the first one that was more general and short, and now up to recently the IRS commissioner's comments. They're very direct, very specific in the problems that they're seeing.
Yeah. So I get at least an email a week, probably more than that, on these sticky situations where clients have used these third parties. You're trying to, navigate how you're advising them, how you're trying to figure out, you're having to tell them that they're having to amend these returns. But it's just this sticky situation is how I like to say it. like to say, and there's definitely a lot of gray in there. So how are you handling that? And I don't want to lead the witness for sure, but how are you thinking about ethical considerations when you're applying it to each of these situations?
Sure. Yeah, this was an awful lot more fun when I just got to tell everybody how much money we were going to be able to help them claim. But But now this isn't a problem that's going to go away anytime soon. And it's not just going to be limited to certain areas. I think every practitioner is going to have an issue. And if it hasn't happened yet, it will. These claims are going to keep going. No matter how great your client base may have been attacked, by your work and getting ahead of this, well, there's going to be new clients and those issues that come with seeing a bad claim on a new prospect. So I think we all need to definitely fulfill those ethical standards. We need to, when we see something, notify clients, talk to them about the issues that we see, recommend that compliance, returning of the funds, correcting returns to get there. Those are the obvious steps. But of course, we can't force anyone to do anything, whether it was to claim this money originally or not, or how they're going to respond to it. We can only do what we do as professionals and move forward from there. And that's going to be a wide variety in these cases, I'm sure. But when we disagree with an ERC claim, we have that guidance from the Office of Professional Responsibility at the IRS. It's very clear, not just in applying, what we do as CPAs in our standards, but more broadly, Circular 230. And that notice was applied specific to ERC and saying that we can't repair those 941s when we don't agree with that underlying claim, but also the income tax returns. It's a real issue, absolutely. But I have to highlight, of course, that where we are sitting today, there is still an opportunity to be working with businesses going forward because this is going to be so widespread. Just remember those income tax returns, reporting that income, our prior year's returns at this stage as well. So if we're notifying clients, talking about compliance and recommending that, we're saying now then, well, hey, we can't get behind this. We can't do this for you, but this is a prior year return. It doesn't necessarily affect work going forward and affect those returns, because remember, the ERC income tax effect isn't when the cash is received. It needs to be in 2020 and 2021 related to the wages that generated the credit. So that's something that I see come up in some conversations, and just want to highlight that it is tough. Like you said, it's not fun. Practically, what do we do to deal with this? It's not new. We have to deal with third-party information or even taxpayer information. Can we rely on that when we see it? It's easier to just turn a blind eye than to dig into some of these sticky situations. But unfortunately, in ERC, it's kind of going to be an across-the-board problem because of what the mills out there are doing, because of contingent fees that exist in almost all these circumstances. It makes reliance impossible on its face. We have to then dig in and do diligence, because reliance isn't reasonable in a circumstance where that third party has a conflict of interest. That contingent fee, it's an obvious conflict of interest. So just on its face, we're going to have to dig in. We're going to have to do work. Our attest people, I'm not one of them, but they're very aware of this issue as well. There's financial statement implications, perhaps needing to book a reserve or disclaim an opinion if it's not in there. CPEA did a special report on all the details of that and how to approach it. I won't delve in there, but it's certainly an income tax problem. We talk about the returns a lot. It's also a financial statement problem, which if we can't get on board and understand the validity of a claim, it can sit on a balance sheet for years. It's also uncomfortable. So if I have to get down to what's practical, what can we do with these things? It does become tough, especially for those that aren't living and breathing this program. I hear the comment, do I need to rework this thing entirely and do it all over? And I don't think that's necessarily where this is at, but we need to still do some due diligence and understand what's wrong in this program, where all the issues. It's ineligibility. Getting your head around that, understanding what are the biggest red flags. The IRS has put out a lot on that. The way they're attacking these audits is also instructive, asking for specific orders, highlighting where the effect is, asking for the more than nominal calculations, getting that specificity in the process. I think that's really where the time is spent, and not necessarily ticking and tying a spreadsheet of did the wages calculate. Focus on where the focus needs to be aware of the big red flags. Supply chain was in the recent memo. That's a red flag. Q321 claims on a suspension. It's just very tough. There weren't a lot of orders then. Those are the things I would definitely recommend, and the tips to focus on where the issues are. Absolutely. And you don't have to go it alone. One thing I've learned in the last few years has been it's an amazing group of professionals out there working in this space, and plenty that are very knowledgeable and can come alongside to help other practitioners in this process, educate them on a strength or weakness of each claim. So that's definitely something else that can be done to be able to move through those tough situations.
Yeah. One quick last thing I want to talk about before we move on is, you mentioned clients who have, buyer's remorse, I guess would be what I would say. And we've heard a lot of discussion recently about an IRS coming out with a compliance program or, coming forward. What are your thoughts on that? How are you, helping your client navigate those decisions?
I definitely hope something does come, so there's something more specific, but we don't know what that'll look like or when that may be. So for the time being, my recommendation has been, if you have this situation and someone's ready to repay this and get right, there's no time like the present, and there's only benefits in my mind to doing so. It stops the interest, qualified amended return, eliminates the potential of a penalty if you've done it before you get audited. It also gives businesses the time to add back those wages and deduct them. So there's an income tax refund benefit, which is going to be lost for 2020 here in April, and then another year out for 21. So that clock is ticking. And then maybe most importantly, the clock is ticking on these big fees that have been paid, either not paying them or trying to recover them. That's a gamble. The longer we go, the more time passes, the less likely a big fee like that could be recoverable through legal action.
Yeah, I think definitely more to come, and we'll be sure to keep the town hall audience involved as we learn more about what the IRS may come out about this. Here's some resources. We have resources. We'll continue to put out resources. Thank you so much, Dan, for helping us think through some of these really tricky issues.
Thanks for having me.
April, Dan, thank you. It's a great discussion. As you would imagine, nothing lights up the Q&A like an ERC conversation. Maybe I'll ask Dan one question, and we could take a few more during open forum. But just for those returns that you have filed, ERC claims you have filed, and everything is in order, do you have a general sense of what the turnaround time on refunds has been running?
Well, we had been in a kind of a 6 to 8 month range for most. Now with this most recent news, we'll see where that goes from here. I think it's anyone's guess at this point what comes.
Great. Well, it was a great conversation, guys. Thank you both, and we'll bring you back up in a few minutes and take some more questions. All right, so pivoting from ERC, we want to bring in our next guest, Ron Baker. Ron, always great to see you. Thanks for being with us here today.
Oh, thanks for having me, Michael.
So Ron is a noted author. He's the founder of the VeraSage Institute, and is kind of dedicated, his work life to really working with professionals and innovating in all aspects of their firm. And we've had Ron on the town hall previously, and have probably focused more of our conversation around pricing. But I think, Ron, today we really wanted to talk more about business model transformation, and to really do that effectively, while revenue and pricing is a piece of that, we need to zoom out a little bit and kind of think of this a little more holistically. And so kind of inviting you to maybe take us through that discussion here.
Yeah, the late Andy Grove, one of the founders of Intel, used to say that disruptive threats don't come from new technology. They come inherently from new business models. And we see that when we see Airbnb or Uber or whatever move into a market. I mean, the old saying that what kills you doesn't look like you has got some truth to it. And business model innovation is where creative destruction manifests itself in the marketplace. I mean, it's very dynamic. And when you scale back and think about the business model, I like to point out that there's 4 foundational principles, which of course is the start is your purpose. This is the whole Simon Sinek, start with why. Purpose is in your DNA. It's what you do without having to think. But then we got to move to strategy and positioning. And I think firms like to jump right to pricing, but it's really important to devise a strategy. And a strategy is not a plan. A strategy does not start with goals. Good strategies, the goals are the outcome, not the input to the strategy. A strategy should be unpredictable. It should be somewhat uncommon. What's interesting about strategy is we can all identify one in hindsight. Southwest was a brilliant strategy, right? Flying into secondary cities, not having a hub and spoke, using the same airplane. Everybody poo-pooed it, though, because nobody thought it would be successful. And so strategy is, one of my favorite definitions, is the rare and precious skill of staying one step ahead of the need to be efficient. And what I mean by that, Michael, is that if you don't have to constantly worry about being 100% efficient, because we're in a human business and humans aren't efficient with one another, they're effective with one another, right? We can be efficient with things, but we have to be effective with people. And if we have some breathing room, we can innovate. Efficiency is the antithesis of innovation. So if you think of companies like Apple and others that, are so are so profitable, basically, they have time to innovate and create. And then you've got your positioning strategy, where we have to be something for someone. We can't be all things to all people. Do firms want to be Morton's, or do they want to be McDonald's? Or are they trying to be a vegan restaurant too? I mean, a brand can only stand for one thing. We can't sell Rolls Royces and Chevys out of the same dealership. And so these things are very interrelated. I sometimes think, I look at professional firms and think, if they were veterinarians, they would have a sign outside that said veterinarian and taxidermist. So they could say either way, you get your cat back. But you can't do that, because strategy and positioning demand trade-offs. We just have to focus. And therefore, these things are what drive pricing. The tail doesn't wag the dog. People like to jump right to pricing and then think about the outliers. What about this? What about that? But you have to have a coherent and interdependent strategy and positioning. And then that guides what your pricing can be. And so these are all the foundational principles of the business model. And of course, the last one is your revenue and pricing model questions. Now, the pricing model question is pretty easy. How much are we asking our customers to pay? It's the revenue model that is more interesting to me. And that is, what do we want our customers to pay us for? And that, I think, is a really interesting question, where we can go next.
It's Ron, a great way to lay it out, because we see it over and over again, where invariably conversations are out there in front of firms go right to, well, I'm going to move from hourly to value, and there's not a lot of thought that gets wrapped around that. We see it even sometimes, using kind of an analogy on the technology side. You're going to implement a new solution, you want to implement a new technology, but people don't always take a time or take a step back and say, well, let me think about process or workflow or how we deliver the service before I think about what's the technology. And all these things are dependent and interconnected. So I think it's a great point. Before we move on, though, invariably, we have a lot of small firms listening in to the town hall. I want to hear you state, you're not just talking about big firm strategies. What you're talking about here today applies to firms of all sizes, correct?
Absolutely, yes. It has no bearing on the size of your firm. Every firm needs a strategy, even if you're a solo, and you need to be well positioned in the marketplace. And so this book, Michael, The Crux, written by Richard Ramelt, he's a strategy consultant. He's got a very evocative and provocative definition of a business model. That's why I put this in here. He says, in essence, a business model explains where revenue will be earned when services are provided free of charge. When I entered the profession in a Big 8 firm, we would see some of our competition give away the audit. I mean, literally put a zero price on an audit, and sometimes even lowball the tax work. And of course, they were trying to get the consulting work. But this question forces us to ask, what if we gave it all away? What if we didn't charge for the service? I find that so liberating. And so that's what I want people to think about. If we didn't charge for the services that we provide, the tax, the CAS, the audit, all this stuff, what would we charge for? And that leads us to what it means to be a professional, which is the next slide. It's my favorite.
So Ron, I'm just going to interject. I'm guessing with that last statement, you want to blow up the Q&A board probably even more than ERC did, because that is a very provocative statement. But that's why you have you here.
It is, but Michael, deep transformations don't come from answers.
That's right.
They come from better questions, more profound, more beautiful questions. And that's all I'm trying to do here. I'm trying to provoke people to think, what would happen if Disney started running CPA firms? Do you think they'd do everything that we do? Do you think they'd study best practices of the current industry? No, they do what Walt Disney did when he founded Disneyland. He didn't build an amusement park. He built a theme park, completely different concept, and nobody thought it would work. All the experts that owned amusement parks at the time told him it would fail miserably. And so Michael Hammer's got this great definition of what it means to be a professional, which is someone who is responsible for achieving a result rather than performing a task. If I want a bunch of tasks done, mow my lawn, walk my dog, clean my gutters, I'll hire a day laborer. But I go to a professional, a doctor, a lawyer, a CPA, because I want some type of outcome, not just an output, not just a tax return or an audit or some type of service. I want to be transformed. I want to move from where I am to some desired future state. For example, I want to retire sooner. I want help getting my kid into college. I want to plan my legacy for after I'm gone. These are all personal transformations that we CPAs can guide. Not a lot of businesses are privileged in this privileged position. And therefore, I think that's the answer to the question, what would we charge for if we didn't charge the services? We would charge for the transformations. And of course, that brings us to the famous hierarchy of value, which was first laid out, by the way, in 1999 in this book by Joseph Pine and James Gilmore called The Experience Economy. And I'll try and do this justice, but I'll try and do it fast. They lay out this hierarchy of value, and they say, if you charge for stuff, you're in the commodity business, you're charging for oil, lumber, timber, whatever. And the question at each one of these levels was, how do we decommoditize a commodity? And they said, well, if you take two commodities and put them together, maybe flour and wheat, then you can make bread. And of course, now we have all different types of bread and different types of milk. And then now you're in the product business where you sell a good, something that's tangible. And that gives you a little bit more pricing power than a commodity level. But then what happens when your product becomes a commodity? Well, then they said, well, then you charge for services, because when you wrap services around a product, for instance, General Electric wrapping maintenance around airplane engines to keep it in the sky, to make sure it doesn't break down, to do preventive maintenance, not just to repair it after it breaks, all of those things. That's a service combined with a good that can get you more pricing power. And of course, I looked at this in 1999 and said, well, CPAs are at the service level because we're professional service firms, and that's what we do. We do services. But that's a very limiting view. Then they said, what happens when your service becomes a commodity? You move into experiences. And this is when, the Rainforest Cafe and Disney and all these things started to open up, and they were providing experiences. Starbucks, great example of an experience, that third way or that third place in between the home and the office where you could go and catch up with a friend or whatever. But then they said, what happens when an experience becomes a commodity? Been there, done that, got the t-shirt. Then they said the highest point on the hierarchy of value is the transformation, because transformations are personal, they're effectual. They're not transferable from one customer because we're humans. We can't transfer one transformation to another. It'd be like saying I can replace one friend with another because we're all fungible. We're not. Transformations are deeply effectual. And this is where I think we are. And James Joe Pine, who co-authored this book, we've interviewed him twice on our show, and he's brilliant. He laid this out in 1999, and we're starting to see it come to fruition. A lot of firms are moving, a lot of businesses are trying to move into this transformative space where they they provide a new you, whatever that might be. We see this with concierge doctors and direct primary care doctors who are there to keep you healthy, not just to cure you when you get sick. That's a transformation, and that's more powerful, gives you more pricing power and more leverage than just providing services. That's why I think this vocabulary is so powerful.
And Ron, we're moving into this language around the different ways to price.
Right. And this is just, I wanted, I really love the line that all transformations are linguistic. In other words, if we want to change our culture, we need to change our language. This is what Walt Disney did with Disneyland. He created not an amusement park, a theme park. He didn't have rides. He had adventures, right? And he didn't have staff. He had cast members because they were on stage or backstage or off stage. And this is kind of the vocabulary that we used under hourly billing. And then we moved to value pricing, or a lot of firms did. And now we're starting to move into subscription. And I think, again, the vocabulary needs to change. So I just wanted to include this chart for folks. It's kind of a handy reference. But I think subscription model finally gives us the chance to align our business model with our purpose. If I talk to a lot of CPAs, I always love to ask them, why'd you become a CPA? Number one answer, 70% or more of the time is to help people. Well, we can't help people if we have 1,000 customers. We're kidding ourselves. We can't have a deep impact and really transform. And we can do serial transformations over and over again, from womb to tomb. From the time the baby's born, we can help them get to college. And when they die, we can plan their legacy for posterity. I mean, that's a very privileged position as a professional. And I just think we're too wrapped up in talking about services and scope of work and outputs and efforts and hours and all of these things. And that's why none of us on this call, that's not why we joined this profession. We joined this profession to help people. So let's align our business model economics with our rhetoric and start putting the relationship at the center. And that's what the subscription model enables us to do. And so the other thing I'd love to point out is kind of where we are in terms of hourly billing versus value pricing versus subscription. When I started value pricing in my firm in 1989, there was nobody doing it. I mean, there was nobody on the circuit talking about it, no consultants, no books, no courses, nothing. We just did it because we thought it was a better customer experience. So usually get that innovators, that 2.5% of innovators. I think now with value pricing, we're clearly in the early majority. So many firms out there have moved away from solely pricing based upon hours. And so I think we're in the early majority. However, with subscription, we're sliding all the way back to the innovators. And for me, that's what business model innovation is all about. We constantly have to be sliding back on this curve because we want to bring new offerings. If we go to the market with a common offering, we're going to command common prices. And everybody seems to be copying one another with CAS and tax advisory and planning and all this stuff. I want to go to the market with something unexpected and dynamic. I want an uncommon offering so I can command uncommon pricing. And then the other thing that's interesting about subscription is when a business model changes, at least two things change. One, the pricing model changes, and the second is the KPIs change. And I just put up this income statement. And I don't have to explain it to this group at all. We should have started with this because this really gives you the flow of what a subscription business is. It starts with beginning ARR and ends with ending ARR. And so you can see here that the KPIs would be totally different in this world. And indeed they are. Cost of customer acquisition and all these other well-used and well-known KPIs for a subscription business. We don't have to reinvent the wheel for those. We know those. And of course, none of them have to do with hourly rates, because what we're doing in this model is we're building lifetime annuities that are more valuable than the cost to acquire them. And that takes our focus off of the math of the moment, profit per customer, profit per job, profit per hour, and it puts it back to the long-term value of the customer. Customer lifetime value now is the key metric. And just one last point, Michael, and I promise I'll shut up. There's only three generic pricing strategies, And I just wanted to put this in here because I want to point out that you don't have to charge at the high end. There are 3 different types of pricing strategy. The skim pricing strategy, firms like Apple and Wachtell Lipton, the most profitable law firm in the world, these are skim pricers. In other words, they price for value and profit. They do not price for market share. Then there's more neutral pricers. Toyota is a great example of a neutral pricer, where they they remove price from the calculation as best they can for the consumer. So Toyota emphasizes lower lifetime customer cost of owning their cars because they're better made. They have quality parts. They have higher retail, trade-in values and all that type of thing. But then there's also penetration pricing. H&R Block, Walmart, Costco. In other words, all 3 of these are viable depending on what your strategy and positioning is. Obviously, Southwest has a different pricing model than the legacy carrier airlines, and it's the same thing for accounting firms. So you can still design your strategy. A strategy is designed, and you can still incorporate one of these 3 models. By the way, you can't use all 3, but I just wanted to put that in there because people think that this just means a premium price and we're only going after the 0.1% of the income earners in the country. That's not true at all.
Ron, thank you for that discussion. I mean, we always, invite you in because you do challenge the norm and get folks to maybe think a little bit differently about what they're currently doing. Ron will be with us out at Digital CPA. He's got a session on pricing and purpose. And we're looking forward to having Ron there, along with some other folks who are going to be talking about pricing more broadly. So thank you for that, Ron. So let's go ahead and open up for a few questions. Welcome back, Dan, Rachel, and April. Good to see you all. So a couple rapid fire questions, folks. Hey, April, maybe you could just clarify. There were a few people that were asking if there was relief or guidance. Disaster relief guidance, maybe in some of those areas, Hawaii, South Georgia. What's the best way to just stay current on whether or not there's anything put out as they go to the resource center? What advice you have there?
Yeah, I was going to say there, I feel like there were some clarifications on some of the wildfire relief, but when I'm trying to figure out what's going on with the latest relief, I go to the IRS.gov website, and there's a disaster relief tab, and it goes through line by line where the relief is and what has been taken care of. So
great. And April, just a follow up on if you could provide some clarification on the e-filing. I think people were questioning whether that's an effective for year 23 or for 2024.
It is effective for 24.
24.
So coming up. Yes.
Great.
Well,
Dan,
let me make sure.
Sure.
It is effective for starting in 2024. The filings will be the 1099s. So, but it'll be for 2023 1099s. So you won't have to file the 1099. Sorry, that I made it more confusing maybe than it was. It is for 2023 1099s, but it'll happen in 2024. Got
it. Thank you, April. Dan, real quick, maybe there were a ton of questions on ERC, but one that seemed to be more of a pattern is, how are you just handling as more and more clients are getting calls, getting contacted by external agencies? Any just strategies that you share with how you address it with a client? You touched on it a little, but maybe you can kind of, revisit that for folks.
Yeah, absolutely. I mean, there are some great resources. The fact and fiction one here at the AICPA is one that I'll share. I'll share the IRS warnings, and recently they've been very strong. And just talk to the client about, what they're seeing and hearing and understanding why they're hearing it the way they are. The person on the other end of that email, the other end of that phone call is receiving a very large commission to make sure that you qualify for as much as possible for as long as possible, no matter what, right? That's the incentive, and it drives a lot of the nonsense we're seeing. And it's the exact opposite when you have, professionals that, under our standards can't do contingent fees, right? And we have other responsibilities here. So we're coming at it from a completely different approach. So educating the client a little bit on why is there such a frenzy here, understanding the risks involved, how the IRS is focused on it. And that's been really helpful. And education is really all we can do at the end of the day. Sure.
Thank you, Dan. And Ron, maybe final question for you. Keep it somewhat brief, but just some folks, they threw out an example, like how would you move to a subscription billing model on an annual tax return? I guess it's a one-time event that's, but subscription kind of spreads it out. I don't know. I know it's probably a lot for you to squeeze in, but maybe you can give a little bit of your thinking on how you would attack that.
No, I would attack that because it's not just an annual event, because it should be all year round. You should have multiple points with your customers, or at least give them access to you when they have questions, maybe on other things just besides their tax return. So if it's just individual tax returns, absolutely, it's ripe for subscriptions, just like DPC doctors, direct primary care physicians, have subscribers to their practice. It's the same thing. The model works there too.
Wonderful. Thank you, Ron. Big thank you to all of our speakers today. You guys did a great job. Lots of great information. Thank you, and hope everybody has a great rest of the day. So just kind of closing out here, wanted to just again summarize for you. Been quiet on the DC front, but stay tuned. We're gonna have a very busy September into October, and the team's all over it. April did a great job of just pointing you to the website as the disaster relief notices for really all of those areas affected. It's very fluid, so it's the best way to stay current. We talked about the e-filing threshold, had a great discussion on ERTC and some strategies as that continues to be, a real point of contention here in the marketplace. And then a good closing discussion with Ron on maybe how to think a little bit differently about business model transformation. We will be back on Thursday, September 21st with the team. We're gonna have a great discussion. We'll again have Mark Peterson here on the governmental affairs. Lisa Simpson, Eric Auskerson will be back in the co-host chairs. Mike Decker from the AICPA exams team will be with us. And we'll have Alan Colton to talk a little bit about some of the, heightened merger and acquisition activity that's occurring across the profession. So it's going to be a really great episode. We hope will join us. Again, you can find any of the previous town halls on demand on the website. And here's a great listing of the most, the 5 or 6 most recent ones. And with that, just a big thank you to all of you for being with us here today. Again, we'll see you on September 21st at 3 p.m. Eastern Time. Thank you.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.